Well, there's a big boost coming in for cement. GST on cement has been reduced to around 18% from around 28%. To help us out with what's the impact on the sector as well as on the company, Mr. Sandip joins us, the MD and CEO at Birla Corp. Hi, sir. Good morning. Thanks a lot for joining in. Well, GST rationalization has come about. The entire industry was talking about this for the last many years. Firstly, how much do prices come down by? Because all of it would likely be passed on. And what kind of impact can it have on demand?
See, first of all, prices will come down approximately, as they're saying, 10 rupees. So it would come down in that region, I would guess, 10 or so. That's how broadly, once it kicks in, that's after 22nd. But before that, one will have to see that you have to actually segregate between the short term and the long term. First of all, the next 2 weeks, I think it's going to be a slump. That's because, when the corrections are coming from 20th, trade down stocks, when you're seeing the prices going down. So September is not going to be such a good month for the industry, is my reckoning, both in terms of volumes as well as in terms of pricing. And thereafter, things will stabilize over there. And that will be, as you are saying, you'll probably see a correction about 10 to 15 rupees, depending on the region, depending on how the balance is.
Okay, got it. So, the broader view is that September could be a little bit softish, but because of this rationalization, it could spur demand. Earlier, you were talking about 7 to 8%, demand growth. Do you think that's possible right now, taking into account, that there's going to be some softness in the near term? And do you want to up that estimate?
See, first of all, it's too early to really make an prediction on the overall demand scenario. But I see the demand will get triggered not just by the correction of the cement duty. Where the monies will go into the hand of people is the all across reduction. So be it in consumer goods, be it in other building materials. A lot of other building materials, as you know, they have also, the duties have come down. So that will give more money in the hands of the home builders to go in for, and it should give a boost to the IHB segment. See, infrastructure demand would be by and large inelastic. I'm talking about the large infrastructure. Where you're going to see the difference is a lot of this will, trigger the rural demand. It'll trigger, the development, expenditure in Pradhan Mantri Awas Yojana and those sort of projects. That'll take out. There you will see a positive impact. But the bulk of the impact will come, I think, from the retail sector. And that is where people like us, who have a high volume of blended cement, high volume of what we call the trade sales, as opposed to non-trade, which is the industrial, the big infra sector, they are to benefit a lot.
All right. So, a couple of aspects here. The street believes that maybe there could be some margin, gain as well, because maybe all of it or most of the pricing will be passed on, but operating leverage will help and focus on premium sales will help. And as you said, I think trade sales for you is around 70% of the mix. Is that correct? And out of trade sales, close to around 55-60% is premium. So do you think people will go in for higher amount of premium now, premium products?
See, premium, when you talk of, there are two ways to look at it. If you're looking at it from your market standpoint, you have to see the people who are operating at the higher price band. And there are people who are operating primarily on the higher price band. So if they have a strong brand pull, they have a pan-India presence, you will see some of the benefits coming in there. And for smaller players who have a mix of premium and what you call popular or the value segment, obviously they could see an uptrend on the premium, which has been generally, as you will see, a trend not only in cement, but in a whole host of industries. There is a premiumization going on. And if things become more affordable, you'll find especially the individual consumers who are now more aspirational, they are going to opt for the branded and, the quality products.
Okay, all right. So there'll be some kind of downtick in terms of pricing. Demand for the year, you're working with high single digit, right? 7 to 8% cement demand growth.
We'll really get to see the demand post the festive season,
Okay.
because there are various factors. It'll be too early to talk of. The
Yeah.
monsoons has an impact.
Yeah.
Some say the monsoon, the heavy rains could
Yeah.
dampen a bit of the
Okay.
agricultural demand, etc. So I would not
Yeah.
right now rush to predict a demand upsurge, but it'll sort of balance out between everything. As you said, if there is a price drop, there'll be certain benefits for price drop to people. It's not all because the coal.
Yeah.
That's a big ticket, I think.
Yeah. So just want to clear, sir, two more points. One is on SGST, because states effectively, now they'll get lower amount of money via the GST route. So will it hit incentives for a company like yours? Do you see it as a risk? Point number one. And the second point, sir, is on coal. Coal, the GST has been up to around 18%, but they're done away with cess. So effectively, that doesn't, increase cost for you. Could that be positive on the margin?
Coal would give people who are highly dependent on domestic coal, I think it'll give them a benefit because of the cess removal. That's the big thing. Because the other GST is going to get offset, that's an input credit, which you will get by and large. So that increase is not going to hit the bottom line straight away, but that cess reduction, especially for people or regions where people are dependent on domestic coal,
Yes.
I think that'll be a positive.
That'll be positive, but the state GST, could it be a risk?
State GST is slightly more complex. There are two parts to it. Those are capital, capex-based incentive. You may have a short-term thing, but the quantum of GST is not going to get affected as GST. And also, if there is a cap, most of the states have a cap, annual cap. So if people are already meeting that cap, it is not going to hit their absolute numbers in terms of number. In terms of the market, I think it should be healthy for the market because it'll create a more level playing field. There are some players who were heavily dependent on incentive, and they will now have to be more prudent in how their pricing goes.
Got that. Thank you very much, sir. Thank you for joining us and running us through first thoughts as far as the GST cut is concerned.